Hello, teacher. My name is Nguyễn Khánh, and this is my presentation of tax planning in business. First, let's go through the client interview and tax relevant facts gathering. The first question is, what is the legal form of Maydays? And it is part of multinational group or a fully domestic enterprise. So Mayday is a limited liability company under Vietnamese law, and it is a fully domestic startup wholly owned by Vietnamese founder and not a part of any multinational group. The second one is, does Mayday have any foreign investor or strategic partners that influence its capital structure or technology? The answer is no. The company is fully funded by domestic founders. Cooperation with foreign software service providers is fully commercial with no equity, profit sharing or technology transfer arrangements. And what are Mayday's principal business activities in Vietnam? Mayday operates in software development. The new project focus on R&D or on AI-based technology platform. Non-R&D software service are subject to the standard 20% CIT rate. Is the company 2024 revenue below 3 billion VND? Yes, the revenue is approximately 2.5 billion VND. And does the company generate incomes from software listening, royalty, or cross-border digital service? No, all revenues is generated domestically with no listening, royalty, or cross-border income. Has the company previously benefited from tax incentives or been involved in any tax disputes? No, Mayday has not received tax incentive and has no history of tax disputes or penalties. And which CIT declaration methods does the company intend to apply for the new R&D project? The deduction method, and it is considered a new investment project. Yes, the 2 billion VND R&D project is a new independent investment. In which economic zone, priority economic zone, will the project be implemented, and what incentive may apply? Several PEZ are under consideration. Potential incentives include a 5-year CIT exemption, a 10% CIT rate up to year 15, and land rent incentives and administrative support. Does the project include plans to export products? No, the initial phase focus on R&D and testing. What is the project duration and the economic useful life of key access? The project is expected to operate for 20 to 25 years. Key R&D assets have a useful life of 5 to 7 years of tax purpose. Will the 20 billion VND investment be financed by equity or debt? The project will be financed entirely by equity. And will the project be implemented directly by Mayday or through a new legal entity? The project will be implemented directly by Mayday. No new legal entity is currently planned. Does the company have any long-term contracts with related parties? No, all contracts are with independent suppliers with no related party transaction. Does Mayday use imported material, equipment, or software tools? Yes, surgeons. Imported items may qualify for import tax exemption if used directly for R&D in a high-tech park. Are double taxation agreement relevant? Not at present. DTA may become relevant if cross-border payments arise in the future. What if Mayday current effective CIT rate? Currently 20%. If incentive apply 0% for the first 5 years and 10% up to year 15. And what are the key tax risks? If incentive conditions are not maintained, risks include withdrawal of incentives, retrospective CIT reassessments, late payment interest and penalties. What is Mayday's primary tax objective in implementing the project? To maximize after-tax project value through lawful tax incentives and improve cash flows. How does tax saving ranks relative to other business objective? Tax optimization supports but does not override technology development, market expansion, and compliance. What is the company risk appetite regarding tax strategy? Mayday adopt a moderate, compliant, oriented tax approach and avoid aggressive tax planning. Next, about the facts, general information of Mayday Company. Legal form is Mayday LLC in Vietnam. Operating model, purely domestic startup, software development, and advanced digital R&D. Expected corporate income tax incentives if the project satisfy conditions for high-tech R&D preferred treatment under the law. Mở qua này đi nhỉ? Expected corporate income tax incentives. Mayday is expected to receive a preferred tax rate 10% for 15 years on income derived from the incentive R&D project, a time-based exemption reduction, CIT exemption for the first 5 year, preferred CIT for 10% from year 6 to year 15. So now we have some issue here. The first issue is, does Mayday's AI-based software R&D project fall within the list of incentivized sector eligible for tax preference under corporate income tax law? The conclusion is the group of industry and trades is one of the least corporate income tax incentives. The second issue is, which priority economic zone should Mayday choose in order to maximize incentive relating to corporate income tax? So I have comparison table here with the region Northern, Central, and Southern. And in conclusion, I have the Hòa Lạc High-Tech Park and Saigon High-Tech Park to maximize the specific incentive for high-tech project, CIT 10% for 15 to 30 years, full land rent exemption for research facilities, and additionally, Da Nang High-Tech Park or Phú Quốc Economic Zone are strategy alternatives to enjoy import duty exemption for R&D materials and special visa policies for foreign experts. The issue 3 and 4 are the annual revenues arising from the project and expense related to the import of input materials exempt or reduced. Project income and imported R&D inputs are legally entitled to significant CIT and VAT import duty incentives. The issue 5 here is, which tax declaration method should Mayday apply in the table of comparison here. Advantage and shortcomings of each project based separate declaration method and consolidate declaration method. So the conclusion is Mayday should apply the project-based separate declaration method to clearly segregate incentivized and non-incentivized income, ensure legal compliance, and fully benefit from the 5 years CIT exemption, 9-year reduction, and 10% preferred rental rate for its high-tech zone R&D project. The applicable incentive include 10% CIT rate for 15 years, CIT exemption for 4 years, 50% CIT reduction for the subsequent 9 years, imported R&D machinery, equipment, and specialized goods not domestically produced are exempt from import duty and input VAT. Next, the legal and customs compliance. Investment registration often separate IRC for the R&D project from the high-tech park. Clearly state high-tech and R&D objectives to secure tax incentives. Import tax optimization. Prepare and register a list of import server, specialized hardware, and R&D materials not domestically produced. Accounting and tax declaration. Separate accounting and CIT declaration. VAT declaration method, register the VAT deduction method to deduct refund input VAT and improve cash flow. Cost documentation, maintain full documentation for foreign experts, software licensing, and R&D service to ensure CIT deductibility. And that's the end of my presentation. Thank you for listening.